HHS Realty Group today, and wanted to say hi. And Ahmad's going to help us out again today. Ahmad, tell us about yourself.
So my name is Ahmad. I'm at the S Group doing this interview for Barry. So what we're doing basically is a podcast today to give you guys more insights, information on what's been going on recently. So claims that people with good credit will pay more for mortgages. Uh, I don't know if people have been seeing this recently. I know you have, right?
Yeah, I actually went to the verifythis.com and really did some research on it, and it's actually got my panties in a wad a little bit.
And explain that. Why is this a bad thing?
Well, so let me just give you a couple of examples, okay? So, do you know what a LLPA is?
Um, no.
So that is the I think it's the loan level price adjustment. I think. Let me find this part in the article. Yeah, the loan level price adjustments, LLPA. And so, for example, if your LLPA fees are 1% of your loan amount, your mortgage lender might raise the interest rate by 0.25 instead, said Lewis. Um, that's not what I wanted to talk to you about. Here's the example I wanted to give you. So, a person with a credit score of 740 who makes a
Mm.
20% down payment on a home, they used to pay a LLPA fee of 0.5% of the total loan value. Now, under the new rules, their fee will increase to 0.875.
Uh,
So it increased the LLPA increased on people that have good credit, basically 740 and up. But if a person has a credit score of 640 who puts 20% down, they will now pay an LLPA of 2.25, where that used to be 3%. So theirs went down. If you have lower credit, your loan level price adjustment went down. But if you have good credit, your LLPA went up to help offset some of those reductions for the lower credit individuals. So I don't have a problem if the government wants to help people lower their LLPA payments for people that have 640 credit score. They need to, whatever they lower it, they need to take that money and put them through some courses on how to rehabilitate their credit and then maintain good credit scores.
yeah.
But don't make people that have good credit pay for it. That makes no sense to me.
Yeah.
That's robbing from the rich to pay for the poor, and I mean, and it's just not right.
Yeah.
That's not how our democracy's set up.
I don't agree with that either. So what does that mean right now? If I'm a guy with a 640 credit score, I benefit from it, of course. But the people that worked hard to get their credit score up, to get their credit score up, to put a 20% down payment, these people are getting penalized basically because they actually worked hard to have a higher credit score.
Yeah, so through the LLPA fee decrease for a person with a credit score of 640, their fees they're saying that their fees are still higher than a home buyer with a 740 credit score. Well, motivate the people with a 640 to get up to a 740 by reducing these fees. Don't pay it for them, and definitely don't take somebody else's money and give it to them to offset those fees. Um, they're also saying, but if you do an FHA loan where the minimum is 3%, um, They actually both went down. So under the old structure, a home buyer. So this is on a 3% loan. Under the old fee structure, a home buyer with a credit score of 740 would have paid a fee of 0.75 compared to now it's 0.5. A home buyer with credit score of a 640 would have paid 2.75 under the old rules. Now they pay 1.5%. But they also have, but what they're not mentioning there, so there's a reason why you want to put 20% down versus 3%, right? And it's mortgage insurance. And that's a insurance policy. It's called MPI or PMI. But the mortgage insurance is in case you default, that insurance policy will make the loan, the bank whole, right? So they'll get paid. Well, that's the federal government paying for that. But everybody that has a less than 20% equity in their property on their loans, they pay that mortgage insurance. The only way you can get around not paying mortgage insurance is to have 20% of equity and then only do a loan for 80%. And so just because they're lowering that on both of them, you still have mortgage insurance. So your payments are going to be higher, but that mortgage insurance, there's no benefit to having that. You can't write it off. You can't get it back. I mean, you're throwing that money away.
And so basically with this, what you're saying is that, like, what I'm getting from this is that I'm getting penalized when I go and look for when I have worked all this time to try and get my credit score up. What advice would you give to the person that actually, that's looking to buy a house? Their credit score is over 740. A guy like me, right, looking to buy a house now, he can put 20% down. Would you still recommend buying a house even though they're charging you more for it now?
I think that I would, if at all possible, I would recommend that you continue to rent and buy an investment property, or buy an investment property minimum of, remember, multiple doors. Don't buy a one door house. You want either a duplex, a triplex, or a fourplex to start with. If you can live in part of it and rent out the rest of it, that's the best scenario. And so that way, because you can stay there for 2 years because it's your primary residence, and then you can do it again, right, as your primary residence. Well, now you can do that with a 3% loan. Pay the 3%, keep the rest of your money in your pocket, invest it with somebody else, pull some money together, do some other investments or something, but keep that money not liquid, but as investments and in other investments, right? But and then just do a 3% loan, especially since your tenants are going to be paying your mortgage for you, right?
Okay.
Because keep in mind, and I would have to figure it, but the rule of thumb, these interest rates have changed so much recently, but the rule of thumb used to be that every $10,000 you put down only saved you about $100 a month on your mortgage payment. Okay.
Mm-hmm.
So that money, you can make more money than that by investing that extra cash somewhere else, because then you're diversified too.
Yeah, but what if I don't know how to invest my money in real estate? What if I don't know anything about it?
Well, you get in touch with somebody that does know about it.
And who would that be?
Call
Like a
me.
realtor?
Huh?
Call you?
You call me.
you? Okay. That'd be
Yeah.
a great idea.
So, but yeah, so and we can get into all that on investment properties and mortgage insurance, and all this is stuff that we need to get out and tell people. That's the whole purpose of why we're doing these videos, is to help inform people. But we should have done something today on more standard real estate, but this came out, it went into effect really. They're saying it went into effect today, but I'm also reading in this report on verifythis.com because some people were already paying this in April and possibly in March. But they're saying that it came out today on May the 1st. But so anyway, the article's on our BHS Realty Group Facebook page. If anybody wants to go read it, it is from verifythis.com. It's not my word, but it is something that I don't feel like is fair. Like I said, if the government wants to help people that have lower credit score, we went through a subprime mortgage crisis a few years ago, and that didn't work out so good. You know, let's reduce that money, but also put them through some kind of classes to help them understand how to maintain good credit and how to increase their credit.
Maybe we just put together some type of class like that for people like that, you know. But you know, now that they're penalizing you for having a higher credit score, it seems kind of pointless to actually get up there a little bit. You know?
Well, you know, it's still there's still a benefit to it. You know, to have there's always good, because credit has an effect on everything from your insurance to obviously your mortgage rates and everything else. So.
Gotcha.
But this had me a little stirred up today, so I figured I wanted to get out and share the word a little bit. And I don't know if anybody else feels better, but I do.
Yeah. I mean, the people with a 640 credit score don't feel too bad about it. But, you know, where can they can find this on your Facebook page, this article?
Yeah, but, you know, and we want to help those people with a 640 credit score, but we're not about just helping people buy the house for that day and making the sale. We want to make sure that we can help them stay there, right?
What do you mean by that?
Where they can buy another house later on, and then buy another one after that, and buy another one after that. Real estate's a relationship business, and so I want to make sure that I'm their realtor for life and their family's realtor for life.
Nice.
Where we help them for generations. So yeah, they can look that up at BHS Realty Group on Facebook or bhsrealtygroup.com. They can send us some emails at info@BHS Realty Group. Let me know how you guys feel about this article. Like I said, it's on verifythis.com. It's not my words. I just translated it best I could, and it has me a little upset and red faced today. And so I figured I would express my gratitude to the government. So
awesome. All right. Well, we'll do another podcast at the end of the week, and the beginning of every week. There's a podcast for BHS Realty where we're going to give you advice on how to buy a home, how to buy investment property, everything that you need to know. And anything else you want to leave off with before we get off?
That's it. You guys holler at Ahmad if y'all need some marketing done. He's a great guy. Digital marketing, SEO, doesn't matter. He can help you out. So Ahmad, thank you for your time today. You guys have a great day, and we'll see you next week.
You too, Barry.